In today's video, we're going to be focusing on the three macro triangles by Bitcoin that we see recurring over time, and we can better understand what lies ahead in the future for Bitcoin going forward based on these historically recurring tendencies, with history already repeating because we've seen another breakout on the three macro triangles. As in the past, we're already seeing a breakout even now. So subscribe to the channel for more videos like this in the future. Like the video if you enjoy videos like this going forward, and let's dive right into it. So the three macro triangles, very simple. A macro downtrend tends to be broken, which enables a new macro uptrend going into the halving, but particularly importantly so, rallying in a parabolic fashion after the halving. And we see that across time. Macro downtrend breakout, you can see a breakout into the halving event. Here we saw a deeper retracement, but parabolic price action to new all-time highs after the halving event. And here, once again, the macro downtrend has broken. We are in a new macro uptrend, reaccumulation period here, breakout, going into the halving event, and we'll probably also see parabolic price action to new all-time highs after the halving event. And this is something I've been talking about for the past year, going back to June 2022. The three macro triangle theory is something I've been talking about for a while now, and whenever we see price break down from a descending triangle, we tend to see an acceleration phase to the bear market bottom. You see that across cycles, and we saw that also in June 2022, and ultimately you try to form a generational bottom at these bear market bottoms in this acceleration phase. And in October, I spoke about how we were in a final bottoming out phase after that downtrend acceleration in this tweet. This is downtrend acceleration into capitulation. Then we see the final generational bottom here. And then in November, mid-November, we've already experienced a large part of its downtrend acceleration phase, and we're searching for a bear market bottom around 16,600. So we only went down an additional $1,000 to find that bear market bottom. And in the premium newsletter at the time, I shared how we tend to see either 50% downside after a breakdown from the descending triangle or 65% downside. So we essentially came up with a range of anything from 12k to 17k being that bear market bottom region. And the thing about that is we've before seen a breakdown 65% towards the downside. We before saw a 50% downside. But we also mentioned how price tends to break out a year before the halving. It tends to break its macro downtrend a year before the halving. Also, in this cycle, a year before the halving is when we tend to break beyond the macro downtrend. And a year before the halving is indeed where we broke out also before the halving event. We bottomed out at that 15,500 region, turned towards the upside, entered the pre-breakout breakout phase, preceding the upward acceleration phase. And we're in the upward acceleration phase as we speak. So what can be next for Bitcoin? Well, we know that if we look at the pre-halving period, 2016 for instance, after the breakout from the macro downtrend, we entered a reaccumulation period and then a pre-halving retrace period after we broke out from that reaccumulation period. Here we saw a breakout and then a multi-month pullback, but ultimately after the halving, everything was fine, rallying to new all-time highs in a parabolic fashion every single time. So I think it's very simple to answer the question of what happens after the halving. Post-halving parabolic price action to new all-time highs. 200 days after the halving or so is when we see new all-time highs. Can we get there sooner? It will go against the grain of history, but anything is possible, especially with the 2024 ETF catalyst and halving event being those two major catalysts that could impact price action. But the thing about that is we need to also focus on this descending triangle breakdown point. When we break down below from this triangle, we turn it into resistance sometimes, and then we drop to the bear market bottom. Then you can see in 2016 a reaccumulation formed. Below this resistance, we broke beyond it, and the pre-halving retrace saw price retest this as a support. So this was a support back here, turned into a resistance, acted as resistance again, but weakening resistance because it didn't reject price too much. In fact, it forced price into reaccumulation here and then retesting this as a new support once again. So basically the story is from support to resistance to resistance still, and then new support before rallying to new all-time highs. And you can see that this pattern repeats right over here. We had this as a support, broke beyond it quite comfortably without having to reaccumulate at all, but then retraced into this level to retest it as a support in a picture perfect manner with still lots of downside volatility below here, but nonetheless rallying into a new post-halving parabolic rally. And right here, this was a support which we lost back here into the bear market bottom, and you can see how right over here we were resisting price quite a bit for a few months, a bit lower than this resistance, this level right over here. So reaccumulating below here a little bit in a very similar fashion to what we saw in 2016, and then you can see that we've broken out beyond here, and maybe it's time, slowly but surely, for price to mean revert back into that level, like we saw in the past, back into that level once again. So it's going to be either before the halving or around the halving event. So in 2016, it was around the halving event where we revisited this level. Here we revisited it just before the halving event. And so we should probably keep in mind that we could revisit this level around the halving event or just before it, after we overextend sufficiently and drop back into this level right over here. So this level is approximately $33,000 right over here. So we can see that the top of this reaccumulation phase, right? This reaccumulation phase, the top of this, the range high was 31K. And we can see that this resistance right over here is 33K. So the people who are thinking about longing at 31K for a retest of that range high resistance, they might get front run because of this level right over here, 33K being that really important generational support. So that could potentially be one of the lower targets for a potential retrace. But at the same time, you have to also factor in that right over here, we saw a retrace into this level and even below it in a volatile fashion. Of course, there was a catalyst that helped with that, but right over here, we got a picture perfect retest instead. So if we see a picture perfect retest like in 2016, then 33K would be the bottom for a retrace in the pre-halving period or around the halving period. But if we were to see some sort of downside deviation below 33K around that time, that would be the ultimate bargain buying opportunity for Bitcoin, one of the last fantastic retraces and moments for a discount for Bitcoin. Anything below 33K would be absolute bargain buying territory. So 33K could be that level for Bitcoin just before the halving or around the halving event, which also means that maybe that pre-halving retrace that tends to occur around the halving event, maybe that pre-halving retrace gets us to 33K in the end. Does it deviate just a little bit below 33K? Generally speaking, a very pivotal reference point for price, historically speaking. That's the level that needs to turn into a new support, and that's the level that will probably springboard price into parabolic continuation after the halving to reach new all-time highs 200 days after the halving event itself. Thank you so much for watching today. Subscribe to the channel for more videos like this in the future. Like this video if you enjoyed this one, and of course check out the top right hand corner video for more. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.